Good morning, everyone, and welcome. This is Joe Scarice, your co-founder and co-host of the Creative Birth Strategies podcast, and live here on the Clubhouse Creative Birth Strategies home. So we're going to get started here in just a few minutes, get ourselves going. We're going to be discussing the real estate investor success blueprint. So I'm going to start inviting some peeps in, get rocking and rolling. But in the interim, we will obviously recognize our sponsors that have been supporting us right from the very beginning. I'd like to thank Mr. Gerald Perkins of Perkatech, who provides our video, our social media, our website, just about everything when it comes to working with a real estate professional. So, reach out to him if you'd like to have a one-on-one to discuss uh, in regards to social media analytics. I'd like to thank Lendmark Capital, where I'm senior loan analyst, providing asset-based lending nationwide for real estate investors and professionals throughout the country. And I'd like to thank MB Capital Solutions, where I provide unsecured business lines of credit for real estate professionals throughout the country. And I'm a referral partner there for the past decade, so I'm pretty excited about that relationship. And I'd like to thank Realty 411 with Linda Pelagas, who provides national events and national updates and recognition to real estate professionals throughout the country. And then finally, I'd like to thank TCS Property Management, where I hold my real estate licenses in New Jersey and PA, providing property management services throughout the country. And yeah, no, pretty crazy busy week. A lot of traveling this past week. I was in Pittsburgh, I was in New York, meeting with different types of real estate investors and professionals. A lot of excitement out in Pittsburgh, a lot of intensity, I would say. Pittsburgh's a great market. York and Harrisburg are a great market too. I was in there for a day or so. And, the biggest concern right now is what I'm seeing with clients. And before we get into, updates to the market, a lot of concern about what rates are going to look like. There's some interesting things going on at the Treasury as of last night. So I wouldn't be surprised if there's some shape shifting in the Treasury. They didn't make any moves on the interest rates. Rates are kind of stagnant right now in the commercial space based on the 5-year Treasury. They haven't moved much. Bridge money has stayed very inexpensive, but I do have a concern with why the Fed has decided not to make any moves. Um, is it a fight between the Trump administration and Powell? I mean, Powell's kind of on his way out. At the end of this year, I mean, Trump has made it pretty evident that they're going to take back the Treasury in some form of or some way, and the inflation rate rose a little bit, and and the Fed hasn't really done much, and then personal income decreased a little bit in May. Spending decreased though as well. Um, but the treasury yields are pretty weird right now based on the market. And with AI kind of taking over a little bit of the market more and more on Wall Street, how necessary is the Fed when it comes to decision making on the rates? Felix, did you want to add something before I continue? Felix? I think Felix, there you go. Oh, okay. Oh, you just unmiked. Okay, I'll get back to you in a minute, real quick on that. Hang on one second. All right. So, you know, I do have some concerns where it's all going with the rates, but for the time being, rates are hovering right now commercially for single family through four family, somewhere in the high sixes to low seven. So you're right around the industry standard. Multifamily 30-year money on the DSCR is probably in the sevens or low eights. If you can obviously qualify for more of a Freddie or Fannie loan, you're probably in the sixes, but then you're looking at 5, 7, or 10 arm options. There is a 10-year interest only out there in the 30-year for multifamily. Not seeing a lot of people taking it, but might be some savoring grace on riding out this market over the next 3 to 5 years. Bridge money has gotten very aggressive. We're looking at bridge money starting at like 8.99. That's new construction. That's fixed to rent. That's fixed to flip. Um, so very interesting to see where the type of inquiry that's been coming in this week, especially a lot of fixed to rent. I've submitted probably a dozen. A lot of inquiries on straight on DSCR purchases. People are just buying turnkey. They don't want to get dirty. They want to get involved with the whole minutia. They want to buy something. They want to look at their cash on cash return. They want to look at their DSCR. Credit still has been very good this week. I mean, average credit score has been around 730, 740 for the average client. So the client hasn't changed in the sense of credit wise that are making large inquiries. Um, large multifamily is having a little struggle still. I'm seeing. I've put some articles and some polls out. I'm going to be putting about 6 different polls out this week, based on how to approach the rest of the year in multifamily, single family, new construction, rehab. It's going to be a bunch of articles posted over the next 5 to 6 days. Take a look for a lot of those as well. Some additional uh, insight here. Deep inside U.S. economy, more sticker prices start going up due to tariffs. I don't know if that's media or that's true. I mean, I don't see any difference in cost. I think everything's still very expensive. I haven't seen an inventory issue, especially in material. They're claiming it's heading down, but I don't see that happening right now. Bankruptcy filings are starting to pick up a little bit. I'd be a little more concerned about that. U.S. home buying drops to the lowest level since the 90s. Um, see here, rent control. I hope that never happens, but rent control may offer some short-term relief, but carries long-term costs. I saw that article post up a little bit. Just trying to see if anything else kind of catches my eye before we get into the discussion at hand. More homes, more discounts. Nationwide housing inventory is ticking upward. So it's not just one area or one or the other. So that's pretty much it for the time being. In our discussion today, the real estate investor success blueprint. Um, you know, I'm going to go over what I feel from an investor perspective first, and then I might give some insight to the agent as well. I've put together a comprehensive blueprint designed for today's market conditions, especially mid 2025, focusing on building a scalable, resilient, and profitable real estate investment business. You got to define your investment strategy, choose your core model, picking your market, and know your why. Mastering financial and market fundamentals like knowing your numbers, ROI, cash on cash, cap rate, debt service coverage ratio. You need to know these acronyms. You need to have software to complement that. We do extend that to everybody part of the Creative Birth Strategy the podcast. If you need those tools, we'll provide them to you. You need to better understand private money, hard money, DSCR loans, bank financing, bridge lending. Stay market aware of watch trends, demographic shifts, policy changes and inventory levels. I know something's happening with the Treasury this week. I mean, there's some things moving around there, so just keep an eye on that. Building the right team too. Key players to recruit: realtors, investors, friendly agents, contractors, general contractors, lenders, property managers, a CPA, REO, and a good attorney. I just referred a good bookkeeper to somebody that needed a bookkeeper based on a blog I put up, and they said, "Hey, do you know a good bookkeeper?" And I made some introductions. Securing off-market deal flow. That's the type of events I'm going to. I'm not going to those standard RIA events. I'm going to these investor off-market deal-making deals events. A lot of off-market deal discussion, analyzing consistently, setting up lead gen strategies, having funding ready. Executing operational excellence, renovating with speed and budget control. So you really need to understand your budget and your construction budget and your draw schedule. I do offer templates to help you move that along. Tenant with precision. So you got to be better with tenant identification if you're going to self-manage, and managing cash flow. Scaling intelligently, using leverage responsible, recycling capital, cash out refis, raising some private capital, unsecured business lines, or even we talked about something yesterday on a webinar I was on joint venturing. In the asset-based lending, but most people don't realize you only need one personal guarantor at 51%. If somebody doesn't have the credit at 49 but has the money, that's we could leverage that in the asset-based lending. We just need somebody with a credit score. But if somebody has credit that's a little questionable, but it still brings the money, that's still a potential joint venture. And diversifying your income streams and automating a lot and outsourcing a lot of your work, right? Like I have a third party Google team that just works on all my Google work and my social media. I don't wouldn't have the time to facilitate all that marketing. Protecting and optimizing your business, structuring the protection with LLCs, umbrella policies, liability insurance, tax strategies. You need to sit down with your CPA or your attorney and talk about cost segregation, 1031 exchange, and optimizing your depreciation. Stay educated and network, attending meetups, masterminds, REO expos, following up on great podcasts and YouTube channels. I mean, listen, I appreciate everybody that tunes in here. Love the insight and input, and then invest into maybe coaching. A little coaching doesn't hurt nobody. Mentorship. I'm coaching on a weekly basis. I feel like it's important. And branding yourself as an investor, building that personal brand. What's your social media platform look like right now? Okay, growing your investor list, creating your own meetup, creating authority, hosting events, speaking at REI groups, or launching a podcast. Reinvest and refine. Reinvest profits strategically. Keep more portions in reserves. Reinvest into new deals and funding your brand. Reviewing and optimizing your business model quarterly, and tracking your deal flow and your REI per deal, operating margin, and equity growth. These are things you need to. These are the blueprint for success. These are the tracks you need to lay. Amy, good morning and welcome. Brief overview: who you are, what you do, and thoughts to the Real Estate Investor Success Blueprint.
Hi, Joe. Good morning, everyone. I am Amy Palvido. I a longtime real estate investor. I've been investing in real estate since 2008. I've been in the construction and real estate industry since 2003. Currently, I am a real estate technology startup founder, and I also am the chairwoman of the U.S. PropTech Council, which is the trade association for the real estate technology industry in the United States. Talking about success blueprints, I will say, there's always the tried and true. This is how you do. I mean, you have to, buy low, make sure you're adding value, and understand your exit strategy. Those are always kind of very good. That's a very easy blueprint to follow, right? But the hard part is about you gotta take advantage of what's happening around you and keep up with what's happening around you. So understanding, this one big beautiful bill has a lot of implications for real estate investors in it. So you need to make sure that you're understanding that. I would love to make sure we still have bonus depreciation. And you need to know what that does for you as far as your real estate investment goes. There's a couple other things in that bill, if they do pass it, that'll be really advantageous, especially around like affordable housing. We're going to keep the 1031. That'll be great. I've used that as a strategy a couple of times, and 1031s are awesome sauce. So I'm a fan. Understanding your landscape, I guess, is my best. If I was going to add, to it, is you have to pay attention to this stuff because this isn't the world you live in. And if you're thinking you can do one playbook in one area and apply it to a property in another area, you can't. So you have to understand the landscape that you're working in. So that would be my input for today, or my half a nickel.
Half a nickel, but I got some. So what do you think? What do you think's going on with the Treasury since they did nothing to impact anything for us as investors?
Yeah, I think when Trump makes the announcement of who the next Treasury Secretary is, and he probably will do it soon, that they might do something. But I don't want to. The one job I do not want to have is that one.
Yeah.
I mean, I don't know what they're looking at, but they're economists, and Jerome Powell, for everybody gives him grief. I mean, it's like, this is the one job that if you do something they like, they love you. If you do something that they don't like, they hate you. And but you just gotta have to, I don't know, trust that the man. I mean, he led us through a crazy time. and he was super transparent about what he was going to do, why he felt like. But they've got one play in their playbook. It's either we increase the rate or we decrease the rate, and we have to look at certain things that we need to see. But it's I don't know. I don't know what I don't know what the absolute trigger is for them to lower the rate. I don't know what they're seeing, and maybe they don't want to kick something off that they'll have to go back and raise the rate. I would head to do that too. Like, it's like once you start lowering the rate, there's going to be this expectation that you have to keep lowering it.
Yeah.
And so I just think he's looking at something that's telling him, like, just hang out, just be patient, or whatever it might be. But yeah, I mean, it's interesting. Inflation's nowhere near, like, they kind of quelled it down below 2%, or whoever's marking with inflation. I don't believe that number ever. But I don't know if he was looking for a jobs number to get to a certain level that sustain job losses, and that would see that he, like, pushed it too far. I don't know. It's like we're in a weird time.
I know.
It's super weird.
So
I don't envy him at all.
So then my next question would be, and then we'll keep moving this along, is, you do a lot of podcasts with a lot of AI related prop tech individuals, right?
Yeah.
What do they see as the real estate investor success blueprint? Like, it's not all about just real estate agents and the market. Like, what's the thought of the investor today that's so important in your space than ever before? Like, who is separating themselves from the rest right now as a real estate investor?
That are using AI for site selection, they're able to find deals faster, and they can, not only are they using AI for site selection, but they're also using AI to underwrite, because what's going to happen is at some point in time, we'll get back. And do you remember those days, like 2021? It was like deal fatigue. Like, we had so many deals that you were underwriting, and, like, you were looking at everything because there were so many transactions happening, and you could not underwrite everything.
Yeah.
You had to, but now AI will solve that problem for you. Like, AI will do your first pass of underwriting now. And so you're just, so what a real estate investor can do is can use AI to target an area, look at deals in that area, and then underwrite it for you so that you can get really efficient with, okay, we want to make offers on these kinds of deals. And so those that are actually using AI in that way will do more deals. I think from a lender perspective and insurance perspective, by the way, y'all, they're using it too.
Oh yeah.
Coming up with this stupid underwriting and this stupid CapEx budget, because they're going to go, what the F is this? Like, who are you, crazy person? And no, let's do something that's realistic, because we know what's on that property, and we've underwritten it too. So it's definitely interesting. So there's AI provides for, it does put a big open spotlight on how bad our data is. It does do that. So you have to make sure you're getting, and people are starting to get better and better about how they do their data governance. But it's a starting point. It's not the end all be all. You're not going to have it go negotiate deals for you yet, but it does allow you to sift through all this unstructured data to go find those diamonds in the rough, and or spotlight them for you, so that you can kind of make better decisions or faster decisions as a real estate investor. You're not having to swap through, like, tons and tons of deals, do lots of underwriting, like do things like that. No joke. I asked ChatGPT to do a pro forma for me on a quadplex that I was going to buy, and then I was going to, like, I was going to basically doze it and build, like, this big huge house on it. And I was like, hey, take your first stab at it. And so I asked Chat, I was like, this is what we want to do. This is where we're at. And then it came up with, okay, it searched the web for like interest rates for the loan. It goes, you have to do this, you have to do that, you got to think about this. You're going to get this loan here and this loan there, and these are the interest rates. That it was pulling from the web. Now the interest rates are a little low, so I was like, that's not right. But it walked you through an initial pro forma of that deal.
Yeah.
Oh, yeah, okay. Well, that's a good starting point for me. So then I can just and then I use chat sometimes to think of things. It'll be like, okay, do this, and I'm like, oh yeah, I probably should add that in there, right? And so that's it's a sanity check for another person to kind of ask for certain things. But yeah, I mean, it's cool. You need to use it. You need to be AI enabled. That's what the term is now. You got to be AI enabled.
So
AI enabled, somebody else is, and they're going to beat you to it.
Yeah, no, you kind of hit it right on the head. So like I had somebody send me a deal in not too far away from where I live, and I ran some AI tools comparatively to the deal itself, and it came up, hey, did you ask about the septic? Did you ask about this? And I'm like, and then I go back to the guy and say, did your numbers include a new septic? He's like, no. And I'm like, well, this deal ain't going to work. You're going to be way off on the after repair value and buy-in. I said you're probably about 30,000 over what I would buy it at. And then I had another young lady that I was on a webinar yesterday morning, and she had no construction experience, new construction experience. She had like one rental acquisition, and she gave me this whole write up, and I did it on an AI setup and ran everything, and then ran the possibility of her failure and how most likely she'll be in foreclosure within X amount of time. And here's the thing. These are the reasons why she shouldn't do the new construction thing. She should just do a rehab. And it broke it all out. And she's like, well, you're trying to really downplay what I can do. I'm like, listen, these are the numbers. Like people fail because they try to take on too much.
Oh yeah, it's great for stress testing.
Oh,
it's awesome. Oh yeah, it's like that's one of the easiest things AI can do for you.
I did it. Yeah.
Of all the things, and then it runs all the scenarios for you. Like it'll ask you like, how much do you want to see the interest rate rise, or how much do you want to see the income, the expenses rise, and I'll run through all the scenarios for you and spit it out in like 5 seconds.
Yep.
Awesome.
Yep.
Yeah. No, it's great. Sophia put in the chat that she wanted me to explain site selection. So. Using AI for site selection. So you can use AI to kind of determine. So for developers, that's the kind of the term, but basically it's finding a property. So, but for developers, it's more of determining path of progress. So you can use AI to kind of predict where the next set of developments are going to go based off of certain criteria. You can ask it, and that's what developers think like 5 years out, 3 to 5 years out. That's kind of where we think. But you can also use it for like certain site selection for different real estate asset types have different criteria and different models. But you can just tell the AI what you're looking for, and it can go look for parcels of land or properties for you based off of the criteria that you're giving it. So that's kind of what AI has been doing, and that's what site selection is. So I did want to answer her question.
No problem. It's all good. I can't always check the chat, so I appreciate that. So let's keep moving this along. Let's talk about the real estate agent success blueprint. I put some things together, and then we'll tie it in with Bob, Felix, and Van. Grow, dominate, and deliver results. Okay, so the agent blueprint here, you need to clarify your niche and value proposition. You need to specialize to stand out. First-time home buyer, real estate investors, luxury, relocations, short sales, probate, midterm rental investors. Craft a clear brand. Like, what problem do you solve better than anyone else? Or I help out-of-state investors find cash flowing properties in X town or X city. Okay, or X market. Build a scalable foundation, realtors. Tech stack essentials, CRM, marketing, transaction management, AI, automation, like what Amy and I were talking about, routine systems like daily lead gen, weekly content posting, monthly market updates, then master lead generation, inbound and outbound. Inbound, YouTube videos on market updates, buyer tips, investor walkthroughs, SEO blog content, Google My Business, local events, outbound, circling prospecting, FISBOs, expireds, investor outreach, direct mail, networking, cold calls, follow-ups, database mining, past clients, referrals, birthday calls, equity updates. Nurture and convert like a pro. Speed to lead. Respond quick. Use multiple channel drips, email, text, call, DMs, including video in every step when possible. Scripts and dialogues. Practice objection handling weekly, personalized investor conversations on cash flow projections. Become a local market expert, knowing your stats, cold, median price, days on the market, absorption rate, rents, DSCR rates, no local laws and nuances. When's the last time you got to a zoning meeting in your market? Landlord tenant laws, zoning rules, STR regulations, no off market opportunities. How many wholesalers are you working with in your market? Build a pocket listing network with wholesalers and investors. Leveraging social media and content marketing. Weekly content plan, reels on tips and stats, listing tours or investment breakdowns, testimonials and client wins. Listen, I have offered multiple times to everybody in this room to have a one-on-one podcast to brand your business and push it out there for you. Position yourself as the educator. Repurpose everything. Turn one blog into 5 posts, one video into 10 clips. Work smarter with investors, understanding investment math, ROI, DSCR, cap rates, cash on cash return, equity growth. Provide underwritten deals like what Amy and I just talked about. Building long-term repeat clients. Treat your business like a true business. Time block daily. Track your KPIs. Delegate and outsource. Networking and collaborating. You got to go to your chamber groups. You got to go to your meetups. You got to go to your REI groups. Partner with lenders, insurance agents, attorneys, and CPAs. Host your own workshops or webinars. Evolve, learn, and scale. Invest in coaching or mastermind. Taking courses on negotiation and marketing and tax strategy. Growing a team of refer-based empire. Most of the people I work with, I expect referrals back when I'm referring them people. Okay, it's not a one-trick pony in my world. Mindset and resilience, daily routines, bounce back fast, celebrate small wins. Okay, the daily routine is so key. Doing something consistently, like example, I go to the gym every day. Every single day, I do an hour of something. That gets my whole mind in balance to everything else I need to do for the day. So after this podcast, I'm going right to the gym. It's part of my routine. Then the rest of the day is going to be very clear. Bob, good morning and welcome. Brief overview, who you are, what you do, and thoughts to the Real Estate Investor Success Blueprint.
Hey, Joe. This is Bob Chesick, President of Chespin Corporation. I help people set up LLCs and corporations. I'm not here to give any legal advice. I just want to reiterate, first of all, what you were saying earlier about making sure that you have your infrastructure in place, such as if you're going to do LLCs, if you're going to have insurance, all those things, the infrastructure needs to be laid out before you go to the table to make your deal. Far too many times I get phone calls from people saying, hey, I bought this property in my name and I want to flip it to an LLC, only to find out that, and then they find out that because of the deal they made with the lender or some other factor, they can set up the LLC. They set up the LLC and then they can't move, they can't transfer the property for one reason or another. And of course, they want their money back. Well, that's kind of not how this works. So make sure that the biggest and most important thing when it comes to the success, to being successful in it, is basically line up all the ducks. And if one is meowing instead of quacking, double check it. So put everything together and then walk to the table ready to go. Yes, it costs money. Yes, it takes time. But if you're scrambling at the last minute or you're trying to hack it, you might be successful, but if you have to make changes down the road, it's going to be a lot more painful to attempt to do it. So that's always my key advice was get the infrastructure in place first. And that's probably part of my civil engineering background talking there too. Now, the other thing we're talking about, and Amy is the guru of AI stuff on here, no doubt about that. But one thing I always caution with it, it's an excellent tool to use, and I'm sure Amy will agree with me on this, but you cannot over rely on it. You still have to put in the work at the end of the day to make sense of what the AI generates for you. as they used to say with Google and the internet back in the early days, or was it Alta Vista and Yahoo back then? I don't even know. It was just because it's on the internet doesn't mean it's true. Garbage in and garbage out. Anything true with the computer. So always when you're using these tools, you need to take a moment to look over and make sure that A, you understand what's being generated in front of you, and B, that it makes sense for what you're trying to do. Yes, it can be used to double check your work, to find potential problems, pitfalls, and all that. But at the end of the day, it's going to be you signing that deal. We don't have a situation yet where the computers are going to take over the deals. And by the way, let's be honest. There's probably some of us that are not looking forward to those days because it's like, okay, well, now what do I do? If you're lucky, you sit on a beach and have a robot serve you drinks somewhere in the tropics, but we're not there yet. The bottom line being, always double check everything, because you cannot stand in front of a judge in a courtroom and blame AI for what you signed on the paperwork when your contract goes bad and you just got sued. Those are my thoughts. Nothing I said was intended as legal advice. Joe, back to you.
So, Bob, you and I talk quite often, right? Why are we still seeing consumers that are getting into the investment space not leveraging all their properties into the LLC right off the bat when asset-based lending is so much on the forefront where everything needs to be in the LLC? Who's giving them this advice? Like, why? I mean, you and I in the last week have talked to 4 different people that had properties in their personal name and not in the LLC. Like, what am I missing?
I see it coming from two different angles. Number one, some people are just plain cheap. They look, oh, well, that's going to make my interest rate go up, or I don't want to spend the money on that right now. I'll just deal with it later. So they're trying to hack everything and do everything as cheap as possible. And then they get caught up in a situation where they realize, oh crap, I needed to have done it the other way, then only to find out that either there's a roadblock stopping them from doing the conversion to the LLC, or it would just cost them far more money than if they had just done it right in the first place. And as you are aware, Joe, I can turn these LLCs usually inside of a day or two. So people aren't really waiting long. In fact, in some states, I can get them back same day. And you and I do a lot of work, Pennsylvania, New Jersey, and Delaware, and you're seeing LLCs go into people's hands within a business day or two, depending on the state. So it's not like we're playing the waiting game, but people are calling me the day before they're going to the table with the deal. And it's like, can you get the LLC today? And the answer is, it depends. Ultimately, the state could hold up the deal, or the IRS might not issue an EIN number, and you have to apply manually, and that's 4 business days at a minimum. Usually it takes 15 to 30 to get the letter back. So people run the clock out and then panic at the last second. So really it comes down to some people just don't want to spend the money, or some people think of it as just the infrastructure is absolutely necessary. But to the other point, as you know, there are a lot of places out there giving very, very bad advice. And there are people that just think that this is some get rich quick scheme. And there are, unfortunately, people there's not going to be names, bent finger groups, but there's people, you see them on TV, you hear them on the radio, you hear it everywhere, and online. It's not a get rich quick scheme. You have to put in the money. You have to put in the investment. Anyone who tells you that you can make money without having to spend any money is lying somewhere. Somewhere down the line, maybe you're not putting anything up front, but at some point, someone's going to be knocking on the door saying, hey, where's my money? So at the end of the day, it comes down to the mentality of the investor. But like I said, it just depends. Are they just trying to be cheap, or are they just trying to get rich without spending any money? When you wind up in one of those two scenarios, it doesn't take long for the plan to unravel quickly.
I'm thinking about what you're saying right now, and there's no short way of success. There's no short trail. The turtle in every story always beat the hare. Okay. It just bewilders me because, like, just talking to a client saying, hey, listen, what's your credit score like? Oh, I have a 660, but my wife or my husband has a 740. Well, just change the operating agreement to 51% to that party, and then suddenly everything looks a lot easier. Really? I'm like, yeah. Now, to get them to fix the operating agreement, And Bob, I just want to double check. What else has to change if they change the format of the operating agreement in percentage of ownership? What else has to change to make sure the lender, meaning myself, is satisfied with that change?
Well, first of all, that change that there should never be a change involved in that if it can be avoided. That decision should be made before the operating agreement is drafted.
Correct.
And
But things happen.
one of the people that we talked to in the past week, they contacted me back to do the very change that you're talking about.
Correct.
And once a service company like me locks in the operating agreement, for me to go back and edit it, that's considered unauthorized practice of law. So they have to do the edit themselves. Again, if you know how to do it, it's not a big deal. But I can't advise them on how to do it.
Yeah.
I mean, most people can look at it plain of day and know exactly what to do. But again, remember, that operating agreement went out from our office locked in at a certain percentage. So I try to, especially when it comes down to husband and wife and these kind of deals and all that, I always, and I'm limited to what I can say and do, but I try to encourage people, especially Joe, when you send them over, there are a couple of key questions I ask them, such as, did you and Joe talk about the operating agreement and the percentages of ownership? Did you get these questions answered? While I can start the process of the LLC while waiting for that answer, ultimately I need to know, even before I start, who are the owners of the LLC? What percentages are they going to be? Is anyone past active? I need to lock all that stuff in, because once I sign off on it and turn it over, that's how it's going to go out. And if in some scenarios, and here's another thing I should also understand, that people should understand. The operating agreements spell out how the changes are supposed to be made. And generally speaking, changes happen either one of two ways. And yes, I ask these questions to my customers. Do you want the operating agreement to be modified by a majority percentage of the members, or unanimous, or one vote per person, regardless of percentage, or some other method? And 9 out of 10 times, people will come back and say they want unanimous consent. Now, when you make the changes to the operating agreement, you have to follow the rules that are laid out in the operating agreement. Like I said, this is not just a blind transaction. It is literally a contract between the owners of the business and the business itself, and that is what sets up the corporate veil. And some states, that's going to be far more critical than others.
Bob, there's one question that came from the chat I just noticed. Can the 49% member be the managing member of the LLC?
Yes.
So when it comes down, the short answer, as Amy just said, is yes. There are members and there are managers. And when you are both, you're a managing member. But yes, you can spell it out in the operating agreement who the managers are and the responsibilities versus who the members are. Now, one other phrase you'll hear is organizers. Organizers are the people, and this is particularly, Joe, you and I have gotten into this with Pennsylvania.
Mm-hmm.
The organizers are the people that authorize the creation of the LLC. They might be the members, they might be the managers, they might be both, or they might be none of the above. So once the LLC is set up, the organizers either transition to members, managers, or transition out of the business, depending on how it goes. But the short answer is yes. You can designate any member, or even someone who's not a member, to be the manager. Be aware, though, if they are a third-party manager, then there's going to be some type of W-2 or 1099 transaction. I'll let the accountants handle whether or not which of the two that should be in any particular scenario. But short answer, yes, but there is caveats.
All right, so that's good stuff to know, because I think people don't think everything is status quo, and it doesn't have to be. You know, in the asset-based lending, we don't have regulation, so we can make these changes as we're underwriting, and that's what we did with the client that we're talking about, Bob. We realized one's credit was better than the other, much better, where it was almost a half a point difference in the rate. So it made a lot of sense long term for them buying these properties from a debt service perspective. And they know they had to make the change in the operating agreement. It doesn't change a lot of things other than I could use the one credit for that DSCR, where a regulated bank or even a hard money lender couldn't even consider that change. And that's where asset-based lending, I think, is going to go really quick, really fast in being the most dominant part of the industry of lending out there. I mean, that's personally what I think. I listen. I'm in the industry. That I'm a little biased, but I see how fast our industry is changing right now in a good way. So, Bob, thank you for your insight this morning. Data is absolutely essential. You're welcome. Essential to the real estate industry, and this ties into the blueprint. Okay, not just for like real estate agents or investors, but everyday real estate professionals. Data has become the most strategic advantage. I am a data junkie. So, in part of your blueprint, whether you're an agent or a real estate investor, you make better decision making thoughts behind data driven decisions. They reduce risk, understanding market analysis, the CMAs of the world, the investor underwriting, what Amy talked about, builders, understanding the absorption rates and days on the market, understanding market forecasting and trends. Anybody evaluate the MLS in the past week and see what days in the market are in your market? Valuation accuracy. After repair value is everything in the investor world when it comes to BRRRR. Everything. Investor and lender confidence. Like how confident is your lender with you with your project, right? Are they concerned about the renovation costs? Is it too much? Is it too little? Is it really going to justify the completion of your project? And then what's the location analysis of your property? Is it near a lot of heavy industrial? Is it rural? Is it near board ups? Is it the whole block board up except yours? We need to know these things, right? And who do you need to target? Operational efficiency, tracking the performance of all your projects, reevaluating your cash flow on your properties, whether for yourself or for your clients. Felix, good morning and welcome. Brief overview who you are, what you do, and thoughts to a discussion, the Real Estate Investor Success Blueprint.
Grand Rising, Joe. Grand Rising,
Grand
everybody.
Rising.
Felix Buchanan, Senior, Buchanan Biz Enterprises, the JLix Group. I'm a team leader of now a Keller Williams team, First Exit. Input that I have, of course, piggybacking pretty much everything that everyone said previously. You got to build your team. You got to have your CPAs, your contractors, your accountants, your attorneys. You got to know already when you're purchasing properties how you're going to obtain your funding, whether it's going to be hard money, whether it's going to be business funding. What is your exit strategy? Knowing that whether you're going to buy, rehab, and hold, buy, rehab, and flip, knowing that if you do flip, you can do that you're going to have capital gains, do your 1031 exchanges, just have a plan for what it is that you're doing, what direction you're going in, why. Understanding, this is the amount of money that you want to make in this amount of time. These are the properties that'll get it. Make sure you do your due diligence ahead of time before you buy the property, because you don't win after. You win when you first purchase it, because then what you're doing is you're always chasing your tail, attempting to figure out how you can cut different things from the budget that you already created to make up for the mistake that you made in the beginning. Definitely have your CRM systems to do your follow-ups, present whatever it is that you're presenting from whatever investment standpoint that you are, whatever your niche is. Definitely need a CRM system. Use AI, learn AI, go to classes. I'm in multiple groups. I learn something new every single week. Whatever different people in which that I know, or I do the research to finding out whose information is credible. So why you should go and listen to what it is that they're saying. Definitely mentorships. I'm in multiple mentorships. I have multiple mentors for the different things that I'm doing, because I'm looking ahead in certain facets. This is where I want to get. So this is the mentor that relates to what it is that I'm doing. So it'll be good to learn the information from them. Reading books, paying attention to what's going on in the market, the news, all of that is vital, depending on what it is that and what direction you're going in. Podcasts, YouTubes are very great resources of information. Just, again, check the credibility on the people that you're listening to. Make sure that you're not following someone that they're not doing things in the right direction, that it would be the normal way of doing things, because then if you learn to do things wrong and then you come to the right person, it's going to seem like they're challenging you when they're looking to tell you exactly what you need to do. So that's my knowledge and wisdom for the morning.
Felix, you're the only man that I know over the last 20 years that it's getting younger looking.
I appreciate that.
So, I got a question for you before we go to Van, because I think this is important. You traveled all the way up from Baltimore to Philly to my underwriting white label marketing course.
Mm-hmm.
Other than understanding that you need to control the client relationship and building a brand equity in a very fragmented space and accelerating growth without building a back office kind of thing, and educating niche borrowers more effectively and differentiating yourself in a competitive market, why is white label marketing so important to you in non-QM lending in this space right now, as part of the blueprint?
That's super important, because knowing the numbers not only helps in two ways. It helps you guide your client to know whether or not what are the best scenarios for your client. So, and then it helps the lender in which that you're working with on the white labeling side, because now they don't have to go fishing for information. They don't have to worry about, especially if you put your package together correctly, they know that you've provided them all the information for them to make the best decision. And like you said, everything is quickly. Do it now. To kind of piggyback off of the AI and still stick with answering the question, I'm learning how to have AI not only do the text messaging and the email, the AI bots will be calling you. So I don't have to call you, and I don't have to have a VA do it. I have it set up. I'm in a mentorship where the bot will make the call and get all the necessary information. So now I get to cut out time. And if I'm not available at that time, the bot's always available, even when I'm sleeping, to answer and do everything. So that level of automation, to go back into the question of why it's important, because it gets things done right now fast, speed to lead. So it allows that my client, they know that they're getting the best level of efficiency from me. And then you, as being the lender, you know that when I present the file, we're able to make a quick decision. So now we can move forward with this property right now.
Excellent. You hit it right on the head, Felix, and thank you as always. Known Felix a long time, man, and I would really appreciate his presence. And he's now collaborating with some Sub 2 and Owners Club members in hopefully co-hosting an event down in the Baltimore corridor. So I look forward to getting down there in July and August to kind of network in that Baltimore market and that Beltway area. So look forward to that. So, Van, good morning. You got a lot of things going on here that you got to listen into on the Real Estate Investor Success Blueprint, and you are a mentor and leader for a group called Jumpstart Newark. So it kind of ties into our discussion today. Brief overview who you are, what you do, and thoughts to the discussion this morning.
Yeah, sure. Good morning, everyone. Yeah, my name is Van Robinson, and I am an investor. Typically, I've invested in and still invest in one to four family space, whether that be rehabs and new construction, ground up build. Joe, I really signed on, man, just to hear you, and stuff. And, so I am the executive director of Jumpstart Newark, which is a training program. We train ordinary people how to obtain property, invest, and reduce blight, in the area, I think that one of the most important things for me is mentorship and math, right? Pro forma. You have to. I have to know my numbers, right? To me, real estate is nothing but math, right? If I'm doing the math right, it's obvious of whether I should invest in something or not. The second thing is partnerships. I think that partnerships are really important. All of the stuff that Amy and Bob and Felix and you, Joe, have been talking about. If you put a mentor or a partner in front of that stuff, you'll learn it all. And with less risk. That's what we try to tell the jump starters, to not, don't go out, don't go it alone. Learn from people, and in terms of using AI and stuff like that, I'm really learning, how to do that, and gathering information from rooms like this, because I'm trying to bring cutting edge technology and information to our jump starters and stuff. So yeah, I mean, that's kind of it from me, Joe. Thanks for calling on me. Hope I added some value.
Of course, and I have a soft spot for Newark since I'm a Rutgers Newark graduate, so I started my bones off in there. So if I could be of any assistance, of course, highlighting Jumpstart Newark, you let me know at any time.
Right. I look forward to seeing you. I should be seeing you next Saturday.
Next Saturday? Okay, you let me know when and where.
Okay. All right, Joe.
Sounds good, Van. And Van brought up something really good. Real estate starts with the math, but the success also comes from combining the numbers with strategy, intuition, relationships, and execution. And that ties back to who should be on your real estate team: the real estate agent, the lender, the contractor, the property manager, the attorney, the CPA tax strategist, the mentor coach, the insurance broker, the title company, the wholesaler, the prop tech specialist, the AI specialist, the social media strategist. These are necessary steps in creating the most successful blueprint for yourself, whether you're the real estate investor, the real estate agent, or just overall real estate professional. Amy, some final thoughts to the discussion, the real estate investor success blueprint.
Yeah, I would say that you're going to always have to educate yourself, and stay continuously on top of your markets that you want to invest in, but even the part of being in business, and at the end of the day, if you're a real estate investor, you're a businessman or woman, is that you constantly have to stay educated, especially now when technology is about to disrupt everything and throw it up on its head, and it's going to be extremely disruptive over even the next 2 years. What we see now, how things are get done now, in 2 years it'll look completely different, and that's good news for people who are trying to get into the game, because you can accelerate your learning. But it's for the folks that have done real estate investing the same way for the last 15 years or whatever, and they don't want to change. They'll just get outrun by people who do embrace the technology wave. But I will say technology is going to allow some really cool things to happen. So from remote management, you don't have to necessarily invest in your back door anymore, or your backyard anymore. You can do investing in other states and other things, and technology will make all of that possible, for you to understand what's happening on your properties at any moment in time. And that you can just do that all via technology. So it's going to open the doors for a lot of people to do newer types of investments and newer markets, which means that you're going to have to get really good about how you select your markets, and you're going to have to learn how to do that. If you've been used to just driving for dollars and that's all you've ever done, well, now you can invest in other locations, and you can do that via technology. So I think it's going to be an interesting time, Joe. And if you don't stay educated or on top of it, you'll lose out, and you'll lose out quickly. So you have to, obviously hang out with Joe, and he'll tell you all you need to know, for sure.
Well, I appreciate that, Amy. And that ties into your net worth is tied into your network, and your team is the most valuable part of that network. Top investors often say your team is your leverage. I can't say you do that better than anyone I know on LinkedIn. Yeah, I I mean, you definitely know how to vet, align, communicate, and create a trust factor in your podcast on LinkedIn, which is quite impressive.
Thank you. Yeah, it's amazing. And I will say podcasting, if you is it is an invaluable tool as part of your marketing strategy. I mean, if you're not podcasting, and it can be super specific on however you want to set it up, but it is truly remarkable the people you can get to come into your circle or into your network because you have a podcast. I mean, it's how when I chose to pivot into the data center industry, and that's the industry I'm in, and those are the real estate investments that I make. When I started the Data Center News Show, I could get people on there that I would never have met otherwise, like ever in a million years, unless I bumped into them at a conference. But doing a podcast, I just met them faster. So podcasting is very, very key to your, market strategy. I think LinkedIn is also if you're doing conferencing and you're doing LinkedIn and you're podcasting, that's a great way to content market for sure. Yeah.
Thank you. And again, thank you, Amy. And I'd like to get some final thoughts to Bob Cheswick, and final thoughts to the Real Estate Investor Success Blueprint.
Okay, first of all, Joe, I'll echo what you said. Amy, you seem to be mastering LinkedIn. It's really impressive. I know we're not in the same workspaces there, but I have seen some of the stuff that's come across my screen, so I can tell you're leveraging it. And I want to piggyback on that and say LinkedIn is one of the strongest sources we have in our company for generating leads. And that's when you're doing your social media strategies, and I'll touch on this a little bit with all this because we talk about the LLCs and everything. But one thing I've learned about the social media is there's a couple different ways that people look at it. Some people think they need to be actively engaging on every single platform, but there's others that strategically place where their message goes. Like, as I tell people, just because my customers are on Facebook, they're not looking for me on Facebook. They're contacting me other ways, LinkedIn or on other channels that we have. So when you look at your strategy and where you're positioning yourself, think of who your target audience is and where they're going to be. I'm not saying ignore certain things. What I'm saying is remember that you only have, even with AI tools and all that stuff, you still have some personal bandwidth. So part of your success is going to come from learning and understanding your market, learning and understanding your audience. Who are you targeting? Where are you going to find these people? And Joe, how many times have you and I talked about the difference between some of the event, like between the Chamber of Commerce events, the RIAs, the other events that you're going to, and all that stuff, and just how some stuff is like basically you're just throwing spaghetti up on the wall. You might meet one or two people and then you're gone in 15 minutes because it just wasn't worth it. Versus some events you go to that are maybe peripheral to your industry, but are going to have overlapping interests. Like in our industry, meeting lawyers and accountants and going to those kind of events, they're critical. Teaching at your events where I'm teaching people the proper way to manage their LLCs and things like that. Those are far better for me than going to just some random Chamber of Commerce event in 3 counties away. So strategize, and learn your market and learn your audience. Joe, back to you.
Thanks, Bob, as always, and look forward to having you in future events coming up in the next couple of months. My last thoughts are market knowledge, relationships, vision and value add, and understanding your risk is key to the success blueprint. I want to thank our sponsors, as always, Mr. Yardall Perkins of Perkatech, our social media strategist. I'd like to thank MB Capital Solutions that provides unsecured business lines of credit for real estate investors and professionals. I'd like to thank Realty 411 with Linda Pelagas, national publication, national events provided throughout the country. I'd like to thank Lenmar Capital, where I'm senior loan analyst, providing asset-based lending, DSCR, burst strategy, fixed to rent, fixed to flip, new construction, multifamily, mixed use, general construction lines of credit. And TCS Property Management, where I hold my real estate licenses in New Jersey and PA. And I think this discussion went a couple great different directions to kind of really blueprint the investor and the agent and the investor agent or the investor friendly agent. Okay. And that's, we're the only clubhouse room that provides true white label marketing with a direct lending source. We offer worksheets, underwriting tools. We'll offer complimentary podcasting interviews with anybody that's interested. And if there's interest, please email me and find out what that looks like. We're here to give back. We're not here to take. Okay, but we're here also to make money, and we want to build our power team always. And please reach out to the moderators up here and grab a one-on-one with them and see how you can make money together. That's the best objective what this podcast is trying to accomplish. My quote this morning: true leaders don't create followers. They create more leaders. We're here every Sunday morning, 9 a.m. Eastern Standard Time. We'll see you next Sunday again for another great session of education, networking, and strategy. And this is Joe Screes, your co-founder and co-host of the Create Bird Strategy podcast and house here on Clubhouse. Everybody have a blessed Sunday morning, and I'll be ending the room in the next 30 seconds. And thank you.